Welcome back to the Investor's Library, where we dig into these investing classics, especially for you. And this time we're going to be looking at Common Stocks and Uncommon Profits,
hmm
written by Philip A. Fisher. It was published way back in 1958. Can you believe that? But it still, to this day,
Yeah.
shapes how people invest.
Yeah, it really is. It's a true classic. Fisher was all about that long-term growth, and it's an approach that, has really influenced generations of investors. And it's, I think, pretty interesting that he's also the father of Ken Fisher. You might know him from, those Fisher Investments commercials.
Oh, wow. Investing royalty, huh?
Yeah.
So what makes this book, stand out amongst like hundreds and hundreds of books on investing? What's so special about this one?
Well, I think what's so fascinating about this book is that Fisher, he kind of goes beyond just the numbers. He really he dives into the human element of investing, really looking at the people and the culture behind a company.
So you're talking about his famous Scuttlebutt method.
Exactly.
This is where you go beyond just the balance sheet. You're actually going out there and you're talking to, the competitors, the suppliers, even the customers to try to understand what's really going on.
Exactly. Scuttlebutt is all about gathering those insights that you won't find just by, looking at a financial report. Imagine, you're really interested in a company like, let's say, Tesla. You could use Scuttlebutt to go and talk to former employees, suppliers, even people, at those competing companies. You might even be able to uncover insights about their production, their challenges, employee morale, or even Elon Musk's strategic vision for the company.
That's incredible. So it's like being like an investigator, like you're piecing together a puzzle, but for a company.
Precisely. And Fisher, he gives us this framework to kind of help us with this investigation. And that is his renowned 15 points to look for in a company.
Okay, so let's unpack those 15 points. What are some of the, the key things that stand out to you, especially when we try to apply them to, today's market?
Okay. Well, one of the most compelling points, I think, is a company's commitment to research and development. And I don't mean just chasing, short-term trends, but like truly investing in innovation that could lead to some pretty big breakthroughs, even years down the line. Just look at companies like the ones that are working on gene editing technologies or advanced robotics. These companies, they're really shaping the future. And that's where, that long-term growth potential lies.
Yeah, so it's about identifying those disruptors, the ones that are like changing the game entirely.
Absolutely. Another crucial point that Fisher highlights is the depth of management talent. It's not enough to just have, a charismatic CEO. A company really needs a strong team of leaders who can actually execute that vision and navigate those inevitable business challenges. Think of it kind of like a well-rounded sports team. You really need a strong bench. You can't just have those star players.
That's so true. You see it time and time again. Like poor leadership can really make or break a company.
Yeah. Exactly. And, especially in today's world where, the labor market is so tight, having those outstanding labor relations is also crucial. Companies that actually treat their employees well and foster that kind of positive work environment, they have a real significant advantage in attracting and retaining top talent.
That makes total sense. Happy employees often lead to, a more successful, innovative
Well,
company.
precisely. It's all interconnected.
Another thing that surprised me about Fisher was his stance on dividends. He wasn't a big fan, was he?
I know, right? It seems counterintuitive. But he believed that reinvesting earnings back into the company, fueling further growth often just, trumped paying dividends.
So it's like he's saying, don't take the money out of the game. Let it keep compounding. Let it keep growing.
Exactly. Imagine a company like Amazon in its early days. Instead of paying out those dividends, they poured those profits back into building their infrastructure, expanding their offerings, and ultimately becoming the behemoth that they are today.
Yeah. It's amazing to think about how, some of those early decisions that they made really, shaped the entire trajectory of that company. So this kind of leads us to another important question. When should we buy? And maybe even more importantly, when should we not buy?
Well, Fisher had some really insightful views on that. He emphasized that finding great companies actually trumps, trying to time the market.
So he wasn't a fan of relying on economic forecasts.
Not at all. He believed that the best approach was to identify companies with those strong fundamentals and, a long-term vision, and then, hold on to them through those inevitable market fluctuations.
So it's about having conviction in your choices.
Yeah.
And not letting, kind of the short-term noise kind of sway your decisions.
Exactly. It's easier said than done, of course.
Yeah.
But that's where the real test of an investor lies, staying disciplined and focusing on that long game.
Yeah, it really is, a test of your patience and discipline. And speaking of staying the course, Fisher also emphasized the importance of, not selling too soon. So once you've found a winner, a company with solid fundamentals, a clear growth trajectory, don't let those short-term market hiccups kind of scare you off.
Yeah, it's like resisting the urge to panic sell, right? When things get, a bit rocky.
Precisely. Remember, you're in it for the long haul. So unless, the underlying fundamentals of that company change, holding on to those winners can really lead to some substantial gains over time.
Yeah, it's all about, trusting your research and having the conviction to just stay the course.
Exactly. So now you might be wondering, how do we apply Fisher's wisdom to today's, investment landscape? Yeah, that's a great question. Are there any modern day examples that come to mind? Especially, given Fisher's emphasis on long-term growth and innovation, what are some industries or companies that stand out to you?
Well, without giving any specific, investment advice, of course, if we look at the industries that are really transforming the world today, we see areas like renewable energy, artificial intelligence, biotechnology, and these sectors are just ripe with companies that are not just riding a wave, they're actively shaping the future.
It's like they're creating entirely new markets and possibilities. So if Fisher were investing today, I mean, these are the areas, right, that he would be scrutinizing with his Scuttlebutt lens.
Absolutely. Imagine applying the Scuttlebutt method, to a cutting-edge gene editing company. By talking to scientists, researchers, even competitors, you could potentially gain insights into, the company's scientific progress, the regulatory hurdles, and the overall potential of their technology.
Yeah, that's a really powerful way to assess a company's true value and potential. Going beyond just, that surface level, the stuff that's publicly available, it's like peeking behind the curtain a little bit.
Exactly. It's about connecting the dots that others might miss. And now, remember, Fisher's emphasis on, management depth. That's even more crucial today, in these rapidly evolving industries. You really have to look for companies with, a strong leadership team, the kind of team that can adapt to change and really navigate all the complexities of their particular field.
So it's not just about the technology itself, right? It's about the people that are steering the ship.
Precisely. You can have a brilliant technology, but without the right leadership to guide its development, its commercialization, it can really flounder. And don't forget about Fisher's focus on outstanding labor relations, In today's competitive job market, especially in those high-tech sectors, attracting and retaining top talent it's just paramount.
Yeah. Makes you think about the companies that are really known for their, strong company culture and employee benefits. Maybe they have a bit of an edge, right, into tracking those brilliant minds.
Absolutely. These factors are often overlooked in traditional financial analysis, but they can be really crucial indicators of a company's long-term success.
It's fascinating to see how Fisher's principles, developed decades ago, are still so relevant, in our tech-driven world. He really had his finger on the pulse of what drives that sustainable success, didn't he?
He truly did. But we can't forget about the challenges, that investors face today. We're just bombarded with information, opinions, and predictions from all sides.
It's information overload. I wonder how Fisher would approach, this type of environment, especially with the rise of, social media and this 24/7 news cycle.
Well, he was all about gathering that firsthand information, forming his own independent conclusions. So I think he would still really advocate for that scuttlebutt approach, even more so in today's, really noisy world.
So instead of getting swept up in the latest trends or headlines, he'd be out there talking to people, digging deeper, and really kind of, filtering out all that noise.
Precisely. He'd be asking those critical questions, challenging assumptions, and focusing on those fundamentals that truly drive that long-term value.
Yeah, it's a reminder to be discerning investors, not reactive traders. And this brings us to another crucial point that Fisher really emphasized, and that is, emotional discipline. How do you think that plays out in today's, rather volatile market?
Well, emotional discipline is more critical than ever. We're constantly bombarded with news that can, trigger those feelings of fear and greed, leading us to make those impulsive decisions that can really derail our long-term investment goals.
It's like that saying, buy low, sell high. Easy to say, incredibly difficult to do when emotions are running high.
Exactly. Fisher really understood those psychological pitfalls that investors face. He would encourage us to stay focused on our investment plan, to avoid chasing those hot tips or panicking when the market, dips.
It's about remembering that investing is a marathon, not a sprint.
Well said. We need to pace ourselves, conserve our energy, and keep our eyes on that long-term prize. And let's tie this back to Fisher's core philosophy, investing in great companies and holding on to them for the long haul, That's his enduring legacy.
Yeah, it's a timeless strategy, one that has weathered countless market storms. But what defines a great company today? Is it just about financial performance?
Well, Fisher believed it was much more than that. He looked for companies with, a clear vision, strong leadership, and a culture that fostered, innovation and excellence. And I think that's even more relevant today, as we face global challenges like climate change and social inequality.
So it's like he was saying, invest in companies that are making a positive impact on the world.
Exactly. We have the power to align our investments with our values. We can seek out companies that are working towards, a more sustainable, equitable, and prosperous world.
Yeah, that adds like another dimension to investing, doesn't it? It's not just about, financial returns. It's about contributing to something to something bigger than ourselves. It really does. It's not just about building wealth. It's about, contributing to something larger than ourselves.
Absolutely. And that brings us back to Fisher's enduring legacy. Even though he wrote this book, decades ago, his insights they're remarkably relevant to the challenges and the opportunities that we face today.
Yeah. He seemed to understand that investing is not just about the numbers on a spreadsheet. It's about, the human element, the drive for innovation, the commitment to building something, something truly great. Those are timeless principles.
He was ahead of his time in so many ways. He recognized that investing is about understanding, the people behind the numbers, the visionaries, the innovators, the leaders who really drive companies to greatness. And, he really emphasized that even in a world that is, increasingly dominated by technology, that human element, it remains essential.
It's a powerful reminder that we're not just investing in companies, right? We're investing in ideas, in people, and in the future we want to create. And as we approach the holiday season, a time for reflection and gratitude, it makes you think about, what kind of future are we all building, together?
It really does. And as we wrap up our, deep dive into Fisher's common stocks and uncommon profits, I want to leave our listeners with one final thought.
Okay, I'm all ears.
As you build and manage your own portfolios, what kind of future are you investing in? Are you supporting those companies that align with your values, the ones that are, working towards a more sustainable, equitable, and prosperous world? That's something I think, we should all ponder as we head into the new year.
That's a powerful question to consider. And on that note, I want to wish all of our listeners a very, very Merry Christmas, filled with joy, connection, and perhaps, some inspiration to make your portfolios and the world a little bit brighter in the year ahead.
Yeah, for me as well. Merry Christmas and happy holidays. May your investments in your lives be filled with growth and abundance in the new year.
Yeah.